Good morning everyone and welcome along to the Fat Profits Research webinar for this Wednesday, the 4th of February. My name is Kai Lewis, I'm one of the equities analysts on the floor, and joining us this morning will be Greg Smith, the Head of Research. Now good morning Greg, can you hear me there?
Good morning Kai, good morning everyone.
So quite a substantial piece of news there. A lot of people were expecting it. Ourselves, we've been calling this for a number of months now that we did expect to see the rate cut further. What do you make of this and what does it mean for the market?
Yeah, it was something really the RBA had to do. I suppose we've been talking about this for many months and sort of calling it, and obviously they have been kicking the can down the road as far as dropping rates go. So there was widely anticipated. I don't think it was a lay down misère. So that's why obviously we saw a reaction in the ASX. The market was up close to 1.5% yesterday, so the high at 57.07. That's the highest level since June 2008. Probably more in the currency markets, I suppose. It was factored in a bit more, and that's why you actually saw the you've seen the Aussie rally a little bit. But look, I think it was a decision that they had to make on a number of fronts. I suppose they've been worried about the housing market, but yeah, really, it's no way to sort of I suppose manage your interest rate policy by just focusing in on the housing market, particularly when other areas or aspects of the economy are struggling. I suppose that they have seen the value of the Aussie dollar come down, which is certainly helping in a number of parts of the economy out, and particularly I suppose the exporters, but it probably needs to come down further. Still high by historic standards. And I guess the other key point really is that a lot of trading partners globally are engaged in the big race to the bottom, so they're actively looking to bring their currencies down, and obviously the RBA is cognizant of that fact. So I think well received by the market, and also something we'd anticipated. I think also it actually opens the door up for further rate cuts, having broken the mould there, and I think that's going to continue to provide a bit of impetus in the near term and indeed over the course of 2015 for Australian equities.